All right, welcome to Talkin Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about the market, especially I want to talk about CPI data, its impact it's had on the market, which is going crazy, also on Bitcoin, cryptocurrency, everything. So I'm going to touch on a lot of stuff in this video, so I'll try to be quick. If you're new to the channel, please remember to subscribe and hit the notification bell. Also, if everybody could please smash the like button, it's really helping the channel out a lot. Lastly, if you want to become a member of the channel, you can hit the join button on the YouTube page. Members get some members-only content, as well as a once-a-week members-only live stream where they get to pick a video that I do for the members. So, okay, we hope to see you there. Meanwhile, let's talk about CPI data. The first thing I want to do is show you what the stock market is doing right now. This is a gigantic up day today. Right now, the S&P 500 is up 4.22%, the Dow's up 2.68%, the Nasdaq's up 5.76%, and the Russell 2000 is up 5.58%. Those 5+ point moves, those are pushing 6%. Now, it's the middle of the trading day, so we'll see where all of this ends. Maybe this will settle down a little bit, but these are epic moves to the upside, and we're going to take a look at the charts and see what they mean. And this is all based on the fact that CPI data came in this morning, and it came in better than expected, which is a welcome change. It's been a series of bad news with CPI over the last several months. So this affected a lot of things, and I want to show you ultimately where this ends is in the Fed rate hikes. So we're going to take a look at what happened there as well. This was the opportunity. I was hoping that if we could get this number behind us, we've got the elections behind us, we've got the CPI data behind us. The Fed does not meet until the middle of December. CPI data comes out one day before the Fed meets next month. So we've got a period in the middle here where we're not going to get bombarded with bad data unless there's an outside unknown event that occurs. And for those of you who follow the cryptocurrency market, we'll talk a little bit about that. There have been several events that have occurred over the last 48 hours, and that situation continues to evolve rapidly. This is a chart of CPI over the last 12 months. So you can see we peaked back in June at 9.1. We were at 8.5, 8.3, and 8.2. Now, a lot of those were a disappointment. We thought we were going to be lower than those numbers. And you'll see this month, the consensus expectation was 8%. So this month we actually beat. We came in at 7.7%. In addition to that, it just wasn't all about oil and energy. In the past, sometimes we've had a beat, but it was just because of the fluctuations in oil. This one seemed to be more real. We'll do a little bit of a look at the line items and show you that it does look like things are leveling off. This was good news. Now, it's just one report, so it's not a trend yet. However, you will see, if you look at this chart, at a glance, this does start to look like a good trend to the downside. And you have to go all the way back to January of 2022 for the CPI data to be this low. So we're coming up on a year into being in this inflation cycle. So I do think we're going to start to see these numbers drop, but that remains to be seen. The key is going to be the December CPI data. The first thing I want to show you is what this did to the estimate of what the Fed is going to do in December. This is what the market is pricing in. So you'll see all of a sudden this 50 basis point column, this column right here at 80.6%, this is a 50 basis point rate hike. So the market today, this morning with CPI data, dramatically shifted 250 points away from 75 points. This is now down to 19.4%. A month ago, 50 basis points was sitting at 52%, and then as of yesterday, it had creeped all the way up to 56%, and now this is a gigantic jump up to 80%. This is what's causing the market to have such a big, dramatic move. And we will see, again, sometimes there's euphoria that fades away on this, so we're going to have to see over the next few days. So I will caution everybody to be careful. This is a gigantic move to the upside. We'll see if we settle somewhere in the middle or if this starts to kick off a rally, because this is big. This 80% means the market has pretty much decided 50 basis points in December. I will personally say, and this is not financial advice, but I think it's going to have a lot to do with that December number. The December CPI number is going to come out while the Fed is meeting, and they are going to do their rate hike the next day. So if we have a continuation of this, and it's decent news at least, and we probably get this 50 basis points. But if CPI comes in worse than expected while they're sitting there in the meeting, I feel like there's still a chance that 75 basis points is on the table. I was leaning strongly towards 75 basis points. So now I would say it's more like 50-50. I think it's going to be all about the December data, but in the meantime, the market is reacting to the October data, and the effect obviously is that it's having a massive rally. This is a report from the Bureau of Labor Statistics, right from the U.S. federal government. Over the last 12 months, The all items index increased 7.7% before seasonal adjustment. So that 7.7%, we'll look at the chart below. That is what people were expecting to come in at 8%. 8% would have been better than last month. 7.7% is the strongest beat I think we've had this year. Now, there were still some areas of concern, so this was not good news straight across the board, but it is the first time we've started to see some good news. We have some line items on the summary page that are moving in the right direction, and when you dig down into the details, there are a lot of things that are moving down month over month. So that's very encouraging. We had not been seeing that. We had been seeing some surprise things to the upside. So the next thing they say is the index for shelter contributed over half of the monthly all items increase, with the indexes for gasoline and food also increasing. So food, fuel, and shelter are still increasing. Those are the big ones. So still yet with all of that, the rest of the things that we buy seem to be moving in the right direction. So overall, this report is being received extremely well. Okay, so the two numbers to start with are all items. So you'll see this is 7.7%. Oil had been moving down 4 months in a row. It had been creeping down. It peaked back in May. So unfortunately this month it did go back up. So that's a big move to the upside. So the fact that we are overall down on the month despite the big move up in oil is good news. Food was still up to a lesser extent, but we want to see this go down. This is really going to be when I feel like we'll say that we have inflation under control. This food line has to start going down. It's the best number we've had all year. It was 0.6 in October. It was 0.8 in September, and that tied the previous best. But this is still not where we want it to be. We would like to have this number be a negative. We need to see this moving in the right direction. We did see a big move down in used cars and trucks. So if we look at shelter was 0.8. That was still a positive number. So that's something we want to flatten out and start to get negative. Food and shelter obviously are the biggies. Okay, so what does all this mean? I want to take a look at some of the charts to see what this means and what's happening today. So there are gigantic increases right now. So this is the QQQ I want to look at first. This mirrors the NASDAQ. So far today, we've been moving up. Again, I'm not sure where we'll be by the time you guys see this video. I expect this to be a very volatile day, so we'll see where the day ends. More importantly, we've crossed a line of resistance/support that hopefully we can hold on to, because this does look like it could be the beginning of a rally. I had been hoping for a rally for most of the last month. This is the window of time frame I talked about, where the CPI data is done, the election is done, all the big news is done, the Fed has done their meeting. So we have a window of opportunity of about 3.5 weeks where nothing big is coming out. So if we're going to get this rally, it'll be right now. I'm not going to call for the rally because I've been calling for it for a month and a half and it has not happened, but today is extremely encouraging. This is a rally all on its own. A 6% move on the NASDAQ is a massive move to the upside. There's a couple other very important things I want to look at. This is the US dollar currency index. So this is the US dollar versus other currencies around the world. This has been upward trending since February of 2022, so basically almost the entire year of 2022. This green line, it was a 20-year high in the DXY index. So you can see we took that out earlier in May and June. We have not been below it since. We have gone as high as the last time this spiraled out of control, which I think was 22 years ago. We did reach 121. So this time we didn't get quite that high. We've been going sideways, but you can see we've taken a break to the downside. We're trading at 108 right now, but more importantly, and I'm going to zoom in, we've now made a clear break below this. So if we can close the daily candle below this and start to move below this line, maybe we can turn this into resistance and get back down to a number that makes more sense. Remember, even getting down to 103 is still a very, very high number. So this pullback that is happening right now is actually quite healthy. This does not mean that the dollar is doing poorly. The dollar has actually been too high. So this is a reversion more to a potentially to a normal level here, and if we see this trend continue, that will bode very well for the rally that I've been hoping for. So this is a big breakout. This is the first time this year we've gone below this yellow line. So if we stay below this, again, I'm going to stay below this and close a candle today here below this and see if we can keep this momentum moving downward. The last thing I want to look at is the VIX, the volatility index. So 35 is usually about where panic sets in. This has been trending lower and lower, so this has been moving in the right direction for the better part of a month now. We moved a little bit upward in anticipation of CPI data, but now today we have a gigantic red candle. and this is getting back down to it's under 23. So these are very healthy levels. You'll see the lowest we've really been recently is about 19. So this is getting to a much, much healthier level. The lower the volatility index, the better it is for the market. So a decrease in the volatility index also would be another potential indicator that we are looking at a small rally. So I'm not calling for an all-time bottom, a massive reversal into a bull run. What I'm looking for is this seasonal holiday Christmas rally that sometimes we get, and I think we have the perfect setup for. So that's a lot of the major technical signs that I'm looking at that I think lead us into potentially a good place. However, this has to hold. The other possibility is this is just one-day euphoria. This is a one-day event. We have a giant knee-jerk reaction to this, and then reality sets back in and things start to move in the wrong direction. So it's going to be important that we hold this momentum. So the next few days are crucial. Okay, so I'm going to leave it at that. Right now, the indexes have actually gone up from where they were earlier when I showed you. So everything is extremely positive today. So we finally got a beat on CPI. You can see the market has been desperate for this good news. So it is having a massive reaction. So we'll check in and see if this momentum holds. I just wanted to bring everybody up to date on what's going on, and that is basically driving the entire market today. And the end of all of this is essentially, remember, it looks like now that 50 basis point rate hike is getting priced almost completely in for the December Fed meeting, and that is where all this action is coming from. So that's what I got for you on the CPI data and the market. Thanks so much for watching. If you made it this far, remember to subscribe to the channel and smash the like button. Thanks again, and I will see you in the next video.